Hello, everyone, and welcome to our VA loan webinar. We've renamed, or I should say combined, some of our old webinars into this new one called Don't Fall for These VA Loan Myths. Now, as we let some folks load in here, I'm going to hit on the first couple of slides introducing myself and going over some of the agenda. But thank you very much for being willing to meet with us today to go over these things. To give you a brief idea of the rundown of how this goes, this presentation is our first round doing it. My guess, after looking back over the slides and prepping for this one, probably going to be somewhere around that 15-minute range mark for how long it will take. If you have any questions, feel free to drop them in the comments here, and we'll get them answered at the end. I'll do one look over at Matt, our man running the screen, see if we have any live questions to answer, and we'll gladly do that here at the end. If not, feel free, if you're watching this as a recording later on, put questions in, and we'll work to get back to those and answer them as well. So that's the basic outline for how this one goes. I will talk. You ask any questions along the way, we'll answer. Have any dialogue, and I'll close it out. So, let's talk about it a little bit for ourselves. Thanks for joining us. Our company's name is WeVet. That's really what I like to say the parent name for all of us. We have two companies, WeVet Home Loans and WeVet Realty. The basic premise of our company is to help military families find and finance their next home. So this slide here just breaks you down to those family companies and how we operate. We've got home loans. We're VA loan experts, as we're going to talk. I'm the man that helps run that one. You'd be working with me or our team directly to make sure you can get your VA loan. We've got Realty connects you with military-focused real estate agents. So there's a nice slide with some of that background to it. Now, they do inform me I have to, of course, build myself up to say, I guess I do know what I'm talking about. That's all this slide says. It just says, hey, I have done a lot of VA loans. I was in the military myself, got out, built a business helping military families buy and sell real estate as an agent, and then all of a sudden a real estate broker, and now as a mortgage broker as well to help folks do their VA loans. Okay. I think it's enough time that we've had folks for help loading in here the last 3 minutes. Today's roadmap for this discussion. We want to get right into it, and we're going to hit on a few major things. We're going to talk about what is the VA loan really, so some of the history highlights on it. We'll talk about the power of the VA loan and how it can help you. Then we're going to hit on those top VA loan myths. There's 9 of them. We thought we needed a 10th, but 9. I actually think it sounds better too, because it's not 10, which everyone would expect. We went with 9. But we're going to touch on those and talk about the yeses and nos behind those myths. We'll talk about the real cost in believing those myths. Got some good data that the team pulled that's a little more updated than some of the old data that we had, which is really good. We'll talk about some common VA loan scenarios and questions, and then hit on any live Q&A if we have it here in this discussion. So let's go on into explaining the VA loan. So what is a VA loan really? VA loan, as we like to say, is one of the most powerful loan products out there. And one misnomer that some people assume is that the VA loan is an actual loan that they get from the VA. Like, hey, I got a VA loan. That means the Veterans Administration gave me this loan. Not necessarily the case. The VA loan really, as we go in, there's a couple of our other courses, the VA loan crash course, the history of it, it's really a guarantee for lenders, meaning that if you come to me like, hey, Evan, can you do my loan? Yeah, we'll lend you the money. And the VA says, hey, Evan, as long as you underwrote and gave them this loan based on some standards, if they have any issues in the future, like default and stuff, we'll help cover some of your losses. Generally, there's more math to it, but generally 25% of any losses effectively. So that's why the full name isn't the VA loan. It's the VA Home Loan Guarantee. VA loan for short. But it really does make it so that the VA loan, it makes it so the VA loan is one of the most powerful products out there. And the deal is, as we say the truth here, is that because we as lenders are getting this powerful backing, this guarantee from the VA, a few major things can happen for you. Number one, you can do 0% down if you choose. Flip that in reverse, you can do 100% financing. And even though you're doing less than 20%, which is generally what you look at doing on conventional loans, you're not going to get hit with private mortgage insurance. Private mortgage insurance is where if you put less than 20% down on, say, a conventional loan, the most common loan type out there, you get like what I like to call a monthly penalty, that private mortgage insurance. Because think about it, you put less than 20% down, there's less certainty that if you happen to default, we as lenders might take on more risk. We're going to charge you this little monthly insurance premium that'll cover that risk. MIP is mortgage insurance premium, which is effectively the same thing, but on FHA loans, the other most common loan type out there. So on VA loans, there's none of that. It's not there. Because again, remember, Big Daddy VA is backing up the loan here, so you don't have any private mortgage insurance. Now, on top of that, because Big Daddy VA, I like using that term now, is backing up the deal, you have generally lower risk as a lender. So for us, I should say, we have a lower risk because of that, which means that you should see more competitive interest rates. And if you're not, as my good friend Spencer just said a little bit ago, if you're not, you need to double check your different lender for things, because you should see a more competitive interest rate on a VA loan because the VA is backing it up. Now, it's also reusable across your lifetime. Another misnomer from the past has been, oh, hey, I can only use it once. Not the case. You can use it as many times as you want across your lifetime, as long as you don't lose the eligibility for some unique reason, like multiple defaults and stuff. Now, it's often misunderstood outside of military communities, and that's why, as you'll hear kind of the thread throughout this whole discussion, it's important to work with someone who gets it. VA loans aren't difficult, they're just different. Now, let's go into that power of the VA loan and what it allows some people to do, or I should say just some good pointers that are out there for us. So one, it's the most affordable path to ownership, and it truly is. If you have less than that 20% for a down payment, or let's say you even only have 3 or 5%, you can go into a VA loan if you want to do 0% down. But not only that, you just have some lower costs overall. And the VA requires, for example, lenders to make sure that those closing costs are no more than 1% of the loan value. So certain things like origination fees and underwriting fees, those kinds of things, cannot be more than 1% on VA loans. And they make us do that calculation. It's actually a little bit lower than that because you have to include appraisal and a couple other things. So the VA really helps try to restrict that thing. It makes it so it's very affordable to get to home ownership. Now, the team did pull some good stats on that, saying, hey, it translates to $150 to $300 a month in lower payments. If you're wondering kind of, hey, how does that work out? Talking through a scenario, VA loans, you're going to generally see that more competitive interest rate. And if you just think basic math, if I got a loan and my VA loan is, say, 1% lower in rate, which is common, I usually like to say, hey, between 0.5% and 1.5%, the VA loan is going to be a little bit better in rate by 0.5% to 1.5% than a conventional loan. There are some caveats to that. We touch on the others, like 15-year mortgages. That's often what we see. Let's just assume 1% for easy math. If you have a conventional loan at, say, 7% and a VA loan at 6%, that 1% difference on a $100,000 loan, just a $100,000 loan, would be $1,000 a year. You're literally paying 1% less. It's a $100,000 loan balance, 1% less in interest per year. So your interest reduction would be somewhere around like $80 some a month, right? 1,000 divided by 12. Most folks, average loan balance that we're dealing with is around 400,000, give or take a little bit there. So you're all of a sudden seeing where, hey, that $150 to $300 lower in monthly payments isn't that crazy. It's very real. We do these comparisons for people all the time because we can also do conventional loans, and we'll do them in some scenarios. They can make sense occasionally. Same with FHA loans. But good news is our systems, how we operate, is we can compare them side by side for you to show you. And this is not unusual to see that big difference. It's also because you don't have that little naggy private mortgage insurance that's dinging you every month, even if you're having to be putting less than 20% down. Now, another big thing for the power of VA loans, VA buyers keep more cash. And that's true. It just comes back to that nature of being able to put 0% down if you want to. You ultimately just can keep more of your cash. And some people choose to do that. So as it puts on here, I did get a kick out of this part of the stat where it said VA buyers are 10 times more likely to put 0% down compared to conventional. I had a joke with the team where it was like, well, obviously, because it is the one loan type that allows that, other than there's actually a USDA loan out there. It's another niche, unique rabbit hole too. We don't touch, but I know some guys that deal with it. That can technically be 0% down also. Very, very rare loan type. But no other real loan type offers 0% down. So of course, a VA loan is going to have a higher likelihood of that. But what it also means is that on the VA loan, not only can you can put less down, you can have a lot of seller paid credits to help take down all your closing costs as well. And it's the only loan type that actually allows you to pay off debts at closing too, which is really wild. I would say every few loans we get, we're doing some debt payoff that can really help borrowers, which is very unique to any other loan type. Point is, VA buyers can keep more of their cash in hand if they need to, and not necessarily have a major downside to it either. Now, there are lower default rates on VA loans. So that's number 3 here. Misnomer out there, sometimes people assume that, oh, hey, it's a VA loan, they're putting 0% down, then they must default all the time. In reality, between your 3 major loan types, let's say for simplicity's sake, you got about 60-70% of all mortgages are going to be conventional loan, 10-15% are going to be an FHA loan, and about 10% are VA loans. If you add it all up, you're like, Evan, that doesn't add up to 100. You're right, because there's still like 10% of other random options that could be out there. I threw out USDA loan. You can have a couple other loan types. But for the most part, your big 3 are conventional, FHA, and VA. So out of those 3, VA is in the middle in terms of default rates. It's not as high as FHA, but it's relatively close to conventional, which is really pretty wild when you think about it. You're actually putting, and a lot of people, I would say a majority, but not too many, because we'll talk on it here in a second. We're actually big fans of putting some money down on a VA loan. But a lot of folks will do 0% down, and ironically, it doesn't have that much lower of a default rate than, or should I say higher of a default rate than like conventional loans. So something to understand is that, hey, the default rate actually isn't that much different than any of the other major loan types. So let's go into those myths though that we want to touch on now for us. So the top VA loan myths that we see, again, we're going to hit on 9 of them and go through some detail on each one. Number 1, VA loans are just for veterans. That technically is true. There's one small caveat to it, as we'll talk about, you can read here in the bottom for us. The VA loan truly, though, is just for veterans and for active duty military families. So the one misnomer sometimes there is active duty folks will ask, hey, Evan, can I use a VA loan because it's a VA, veterans? Yes, of course you can. In fact, that's the majority of our clients happen to be active duty military families. But the VA loan is strictly for active duty, veterans, Guard Reserve, and then the one small caveat where you could make the argument that, hey, a civilian can use it is you happen to be a surviving spouse. And we've done 2 of those over the last 3 years. So very, 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 very rare deal. But a surviving spouse from someone who's like died in the line of combat or died from some related disability for things, that certificate will usually pass over. But it's pretty much just anyone who has served or is serving within the military. And it can be Guard, Reserve, and active as well. Let's talk on myth number 2 here. You can only use your VA loan one time. The VA loan is 80 years old. So Service Member Relief Act of 1944. Last year when I was giving these presentations, I was saying the 80th anniversary. Now we're on the 81st. So it is old and it's changed a lot. So sometimes folks think from the past, when it's talked about only using once, that, oh, I think it can only be used once. Not always the case. A lot of these myths in the past might have been truths, but have changed. So it's important to understand the VA loan has changed over those 80 years. And in the past 5 years, there have been a lot of major changes that I would argue have made it the most competitive loan type out there in most instances. And one of those, I should say, not in the last 5 years, has been around for significantly longer. You can use a VA loan more than once. You certainly can. You can use it multiple times. And as we'll talk about here in a second, you can have multiple active VA loans. So you ultimately can use a VA loan more than once and multiple times. Let's talk on myth number 3. You can only put 0% down. As I hinted at a little bit earlier, we're actually fans of putting money down on a VA loan. One of the major, I would say, myths out there that sometimes we've gotten requested when talking and going through folks for like pre-approval calls is, well, I got to do the 0% down, right? What if we go conventional where I put a little bit of money down? Always got to say, you can still put money down on a VA loan. You can certainly do it. And in fact, we also recommend that you get to the point where you put some money down on a VA loan. If you go and happen to watch one of our courses called the VA Loan Masterclass or the VA Loan Crash Course, we hit on what's called the VA funding fee. So for all the benefits VA loan gives you, more competitive interest rate, so you should have, the ability to not have private mortgage insurance, get pinged with that for putting less money down. And another big one is being able to streamline our finances that we'll touch on here in a second as well through one of the other myths. They do charge what's called a VA funding fee, and you want to understand how that works. If you happen to put some money down, the VA lowers that. If you have VA disability compensation, they waive it entirely. But if you don't, like your active duty, a lot of our clients again, if you can get 5% down, the VA chops that funding fee way back. So that's why we're actually fans of putting some money down on a VA loan. We've worked with folks who put more than 50% down on a VA loan. And in fact, one of our things we like to say, we have a client 20-year vision. We want to see our folks have a paid for, near paid for home by the time of retirement. The only way to get there is to start putting some money down on your VA loan to ensure that you don't let that VA funding fee consume and balloon on your loan balance, and so you can just pay things down a little bit quicker ultimately over the long run. So yes, you can certainly put money down on a VA loan. You don't have to stick with 0% down, even though you hear that all the time. And it is a benefit, especially if you're getting started, but just know that you don't have to always do 0% down. Let's go into myth 4. VA loans take forever to close. If you're starting a home buying process or you're, I say a little bit older, I was about to say my age, a little bit older, I guess. In the past, and I should say recent past of things, sometimes people assume that VA loans can take a long time to close. And I will give credit that one of the more recent statistics that I saw, this is about, 6 months ago or so, the average VA loan closing time frame in the country was like 42 or 43 days. Now for us, significantly faster. We see our clear to closes generally around 21 days, so a lot faster. We've done them as fast as 10 days to get a deal done, which I wouldn't recommend that lightning fast just because if you have appraisal issues, but it can be done quickly. Point is, VA loans take forever to close. That is a common misconception out there that we'll hear, and VA loans can be done very quickly. So median close time for us is often significantly faster than we see with all other loan types as well. So they can be done quickly. You shouldn't be afraid of the time frame when using a VA loan. Let's hit myth 5. You can't buy a duplex or a condo or a duplex. The truth is that you can. Now, there's relatively still some stipulations to it. As long as you meet an occupancy requirement, again, talking back to some other forms that we have out there, we have a nice chart that says properties that you can use a VA loan with. And the basic concept of that chart is that if it's a primary residence, meaning you intend on living in it, you're most likely going to be okay. And that applies to single family homes, duplex, triplex, and quads. Now you go beyond that, you're limited, right? As I always like to say, 1 to 4 unit is considered single family and can be a primary residence. There's one other odd exception out there. I noticed even putting this video on YouTube is a classic, because I always said, well, you can't go beyond 4 units. And someone said, well, you can't. Yes, you're right. You can do a 5 unit, where if you're having to live in one of them, it's partial commercial. There is a weird, unique carve out for it that we've never done, never seen done before, by the way, that someone called for it. But think of it this way: primary residence, 1 to 4 units in most cases, is what you can use the VA loan for. So that does mean duplex, triplex, or quad will work as long as you're going to live in one of the units. If you're trying to buy it as a rental from the start, no go. But if you're buying it and you're going to live in one, and then say you're moving in a year, 2 years, you're PCSing, moving to a new location, or you get a job change or family change, you can move out and rent it out and keep the VA loan. You're okay. Key is you moved into it as a primary residence from the start. All right, myth 6: VA loans can't compete in hot markets. The truth really is that with a strong offer and a knowledgeable team behind you, you can get it done. The unique thing about, if you happen to work with WeVet or someone like us ultimately, is that, hey, we're licensed in multiple states, and I like to say we're licensed pretty much everywhere there's a major military installation. So some of your hot markets that can move quickly, up until a while ago, your DCs, some area of Florida, Colorado, some California locations as well, some Texas spots, where you might end up having 5, 10 plus offers on a home, we still win. And what really helps is when you combine a very knowledgeable quality real estate agent and a mortgage lender who gets it and understands a VA loan, you put that together, your odds are going to be really high to still compete for homes against homes that are getting cash offers, conventional offers. It can still be done. And we see it all the time. We deal with it every day. It's important just to have a team behind you that knows the VA loan well. It can help explain that. For example, oftentimes I'm having to give a call to a listing agent, meaning the people that are selling the house. We'll call them. I'll gladly do that to help support the offer. Hey, John's in great shape. We got everything and documents reviewed. This one's good. We're always clear to close in around 21 days. We'll make sure we communicate, etc. It wins deals all the time. So you want to work with folks that are willing to go that extra step to do it. We've got Realty, our sister company, where Marty helps get you connect with an agent who deals with the VA loan often. In our military cities, they're doing the majority of their deals with VA loans. Those folks are winning deals night and day that are also competitive homes. So it's important, as long as you get the right team behind you, it makes a difference. Obviously, I'm going to be biased to that, but I genuinely mean it too, which is a plus. And if you want some good information on that process, like the home buying and how to assemble that team well, go watch our video that we have in our PCS toolkit or our resources page, or if you haven't watched us on YouTube, just for the YouTube of it, home buying process, 10 steps to home buying. And we also have, I think, in parentheses, home buying A to Z. That's a great course that walks through the steps of home buying and how assembling that team can really be effective throughout the whole process. All right, myth number 7, you need perfect credit to qualify. The truth is the VA really doesn't care so much about credit rating. It's a lender dependent thing. Remember what I talked about earlier where I said, hey, the VA loan isn't given by the VA. It's technically still like us as a lender giving you the money and the VA backing it up. So the VA, from a credit rating standpoint, doesn't really care so much. So if you're all of a sudden like, I got denied because my credit is under 700, that's most likely a lender item. We call it a lender overlay. Think of it as VA guidelines, and they're overlaying it with their own guidelines. We work as close as possible to write directly to the VA guidelines, but like for us, we often don't see much success on VA loans unless you're over 620 on credit score. It's a very common spot, but it can be done lower than that. That is possible. So just know that some of those things, especially like credit, you don't necessarily have to have 700, 750 credit scores. You can be in the 6s and even high 5s and still make something work. We've seen it often. Now, let's talk about myth number 8. This is a big one. VA inspections will sink the deal. Parentheses are around there for a reason. Sometimes people assume that the VA appraisal is a misnomer for a VA inspection, or they think the VA inspection, they confuse it for the VA appraisal. So to be very clear, the VA does not do an inspection of the property. The VA does an appraisal, and they require us to order specifically an appraiser who has been certified by the VA. And in fact, I should even say as a lender, when you're going through the appraisal process, this is very different than like conventional loans. We don't order the appraisal from like an appraisal management company that then selects the right people. We go straight to the VA, and they have their VA appraisal portal system where we submit it in, called WebLGY, and they will assign the appraiser. They dictate the process for it. They kick out the appraiser. Now, these appraisers are normal appraisers generally that have an extra skill to handle the VA loan process. Now, what they do is they go and appraise the property, just like a normal appraisal. But on top of that, they look for something called minimum property requirements. By no means an inspection. And sometimes what hurts is we'll see veterans or active duty guys say, oh, the VA, I know they're checking it out. I don't need that home inspection. Not the case, because a VA appraisal is by no means a substitute for an actual proper home inspection. Because those appraisers, sometimes how much they look at those minimum property requirements can vary. And what I mean by minimum property requirements is we have a really good blog. Again, go to our website, because there's pictures all the way across for our website. But you can just go search minimum property requirements. We got a good blog that outlines some of the major ones. But big picture, they're looking for peeling paint, any major glaring issues like holes in the wall, fixtures sticking out, etc., no railings in certain spots, making sure windows can open. That's what they're looking for. But not every appraiser views it the same way necessarily. So it can be, the quality can vary quite a bit on that habitability check or looking for minimum property requirements. So you always want to make sure that you get a regular home inspection as well, because they're not doing a full inspection. They're just making sure the home is safe and habitable, hence looking for the minimum property requirements. But you want to make sure that you get still a third-party independent home inspection if that's really what you want, a full look of the home. So know that the VA inspections are not technically real. It's an appraisal with a little added touch of looking for some minimum property requirements. Let's hit on myth number 9. VA loans are too complicated to be worth it. This slide, marketing, I must say it enough, even used it in the bottom part where you see the truth. They aren't more complicated, they're just different. And that's exactly it. Going back to the pitch of, hey, working with someone who gets it and understands what it's like working with a VA loan. They're not overly complicated. I'd argue they're actually simpler in a lot of respects than other loan types. The deal is, as we talked about earlier, 10 loans are being done. Most of them are going to be a conventional loan. I'll try to do this with all my hands. All those are going to be conventional loans. You're going to have about 15, 20-ish% be FHA. And then you're going to have about 10, 15-ish% be other random loan types, USD, etc. And you got one of them might be a VA loan. Historically, it's bounced between like 8 and 12%. So it's a more rare loan type. The deal is that what that means is, for a lot of places, a lot of lenders, it's the oddball in it. So all of a sudden it does become more difficult because it's not as common. For us, we're the inverse. Like in our world, out of those 10 loans, 9 of those are VA loans. So we know it. You want to work with someone that has the process of it, not just as the loan officer, but the processing team, the underwriting team is built to handle VA loans. It makes it so much more worthwhile of using it, and you'll see that it's actually an easier loan type in most scenarios than other loan types. All right, what's the cost that we said we were going to touch on? So the myths don't just confuse necessarily sometimes people, especially because as we talked about, it's changed over time. It can also cost you thousands of dollars as well. So what are some of those? These are stats that were nicely pulled for stuff, which is pretty good. The potential cost could definitely, up front, could cost you thousands of dollars, tens of thousands. At the most base level, if we just assume down payment, if you're really wanting to trying to avoid having to bring cash into the deal, I mean, if you're putting anywhere from 5 to 20% down on a traditional loan, that right there up front could be a major cost. So like on a $300,000 home, you could be looking at a significant amount of money right there, $15,000 to $30,000 just bringing money down for that property. And using a VA loan, you don't necessarily have to deal with that. 20% down payment on a $300,000 home. That's what we'll often get asked, or I should say even $400,000 is our average sales price. I mean, you're looking at $60,000, $80,000 on a $300,000 to $400,000 home. VA loan, you don't have to deal with that. You can bring less money down and not get hit with that private mortgage insurance, which can be a big cash savings if you need. Going back though, I still always like to caveat, if you can get to that 5% mark, it still helps with that VA funding fee, which definitely helps you over the long run. Now, as well, it can help you for that monthly basis that we always talked about. So the missed savings that we discussed a little bit earlier, where, hey, just by doing the VA loan, you're going to see generally that more competitive interest rate and not have private mortgage insurance, and that can save you in that $100 to $300 a month per mark savings. As we talked about, there at the bottom is a prime example, right? $300,000 loan, you could be looking right there at significant savings each month, just in the interest payments being lower overall. All right, the other major costs on this one's a sneaky one too. So the VA loan's the only loan type out there that has something called an interest rate reduction or finance loan, sometimes referred to as a VA streamlined refinance. The kicker, pause for effect on that one, is that when you do a VA streamlined refinance, as long as your payment is coming down by at least 0.5% and you're at least 210 days from your first payment, you have no appraisal, you have no income documentation. That means theoretically you could have lost your job and still do this as long as you're making the payments. And generally, we're getting it done with a soft credit pull. Sometimes a hard, but we can generally be done with the soft pull, which is pretty wild. Very minimal documentation, very quick to do. Effectively, where this comes from, sometimes people are like, oh, that's crazy. Well, the VA sees it as even if the person's struggling, no matter where they're at financially, as long as they've made their payments, if we can help them lower their monthly costs, that just decreases the odds that we're going to have to potentially pay to help cover this loan. So they tell us as lenders, hey, go crazy. If you can get their rate down and lower their monthly payment, we'll keep guaranteeing it because it prevents us from having to potentially take this to guarantee this loan and pay up for it. So it's a really cool feature only on the VA loan. Absolutely incredible. We've built an entire system around making sure we track that accurately and notify our folks of when that's possible and eligible to do. And you can see an example right there on it. If you come down a little over percent on a $350,000 loan, it can amount to some massive savings each month when doing those. And that's where, going back to that client 20-year vision, we're really big fans of these VA IRRRLs because if you can do those, our system, when we kick out examples, not only just shows you how much you can save, it gives you the actual rendition of, hey, if we took that monthly savings and applied it to the principal of the mortgage to pay it down faster, here's how many years you could shave off your mortgage. And that's exactly how we get to that client 20-year vision. If you can do 2 or 3 of these IRRRLs over the life of your loan and the life of your moving while you're in the military, if you happen to buy between 3 and 5 homes, 2 of these IRRRLs at the right points, pulling your rate down by somewhere between 0.5 and a full percentage point, that's going to help you accelerate to get to where you truly can pay that home off in 20 years versus 30 years. And you're doing it at 30-year mortgage clips because you keep chopping your rate, assuming, of course, rates can come down. But that is one of the major things about it. A combination of using VA IRRRLs and ideally seeing some slight appreciation on your homes as you move throughout the military can make it so that client 20-year vision can become a reality. And I've been doing real estate now for over 10 years. I say over a decade. That makes it sound a little bit more attractive. I guess 12 years, whatnot, for it. And we see that from our clients. They're there at those points where they are paid for, nearly paid for on their home, and they're not even close to retirement yet. So very cool feature of the VA loan to be able to do those streamlined finances. Now, most common questions. We're going to hit these in rapid fire. These are questions that may have been different before, but we'll give you the answer of what they are now. Can I use my VA loan by deployed? Of course you certainly can. We help a lot of folks do virtual closings, especially when they're deployed. Can I use my VA loan to buy investment properties? No, you cannot. But earlier we talked about that carve out, or if it happens to be a primary residence, you can. Does my VA loan benefit ever expire? It does not. It can get invalidated if you happen to do something way off, miss your payments, etc. They'll actually be okay with some of the foreclosures, but you got to be careful about them. They can take it away, but otherwise it never expires. Are there VA loan limits on the VA loan? No, there's not. When I said big change 5 years ago, 2020, big change, no VA loan limits anymore. Can the seller pay my closing costs with a VA loan? Absolutely. And in fact, if you hear folks say, oh, hey, I got my home truly, I actually got money back at closing, that's because they got the seller to help cover their general closing costs like title, taxes, and insurance. Can the VA funding fee be waived in certain circumstances? Yes, it can. If you have VA disability of 10% or greater, then that VA funding fee is waived. Now, live Q&A is where I just look over at Matt and say, Matt, do we happen to have any questions on hand right away? And if not, which he's given me the thumbs up saying it's not, a down or an up, that's where you just go, good. Then we're good. So last slide here for us, the breakout again. If you have any questions, feel free to drop them in the comments. We'll get to them even if you're watching the recording of this one. But if you got questions, you can put them in the comments. You can reach out to me directly. That is my phone number. That is my actual email. You will get me if we're doing your loan. If you reach out through these channels, I'm doing your loan. I'm Assistant Spencer. There's Todd as well. But you'll be talking to me at some point throughout the process, and we'll be making sure we get this one taken care of for you. Your VA loan right there is at the top. If you need a real estate agent, sister company, we've got Realty can take care of you. And then, heck, if you've already got those taken care of for yourself or whatnot, we just want to put the resources out there. I didn't have this while I was in, so we want to make sure it's out for everybody. That's the bottom one, wevet.com/education. That's where you can see a lot of those other courses that I was indirectly mentioning throughout this presentation. Thank you again for watching us. My name's Evan Kaufman. I hope you can go out there and win a home with the VA loan. Take care.